The S&P 500 closed at a record, 7,798.99, up 0.65%, and it traded above 7,800 during the day.
It did that on 69% of its normal volume, while gold, silver, copper, and iron ore were all sold at the same time.
Which is a strange combination. Records usually come with participation, and hard assets do not usually all fall together on a good day for stocks.
So the question is not whether today was good. It was. The question is how much further this goes, and what would stop it.
8,000 is 2.5% away. Here's what is supporting the index, what is not confirming it, and the 4 dates on the calendar that could end it.
Quick note, this is education and entertainment, not investment advice. Companies are examples. Never buy or sell calls. Do your own research.
S&P 500 up 0.65 at 7798.99. NASDAQ Composite up 0.81 at 26,803. Dow up 0.13 at 53,840.
Software up 3.10%. Semiconductors up 0.73.
So the leadership was inside technology, and it was not the chips.
And the volume. S&P at 69% of its 30-session median. NASDAQ 83.
Third straight session under normal. The desks are still empty, and now they are empty at a record.
Start with what went right, because it is the thing we were waiting on.
July PPI came in cooler than expected on both lines. Headline flat on the month against 0.2 expected. Core up 0.2 against 0.3. Headline year-over-year fell to 4.7% from 5%.
Second, consecutive soft inflation print.
Then the $25 billion 30-year auction. It stopped at a yield of 5.216% against 5.058 at the previous one.
And the long end rallied anyway. 2-year down 5 basis points to 4.05. 10-year down 5 to 4.63. 30-year down 3 to 5.21.
After 2 sessions where the long end ignored good news, it finally took some.
One qualifier. The 30-year fell less than the 2-year, so the gap between them widened from 104 basis points to 106. The long end has stopped getting worse. It has not started getting better.
The biggest sector move was software, up 3.10%. Bigger than semiconductors, bigger than the index.
And it came with real money behind it. The software ETF traded 196% of its median volume.
Second session running where the volume says the buying was deliberate. Yesterday, it was power equipment. Today, it is software. The trigger was Workday. Reuters reported that Silver Lake is in talks to take it private at roughly $43 billion. The shares were halted on the move and closed up 17.78% at $206.45 on 402% of normal volume.
No deal has been announced. Both companies declined to comment. It may not happen.
The read-through was immediate. Salesforce up 4.16%, Oracle up 1.92%, ServiceNow up 1.85%.
And the signal is not the price. Workday's revenue is about $9.5 billion, so $43 billion is roughly 4.5 times revenue. That is not a rich multiple by the standards enterprise software once commanded.
The signal is the leverage. A buyout that size has to be financed with debt, which means lenders had to underwrite that Workday's subscription cash flows survive the shift to AI.
That is a considered vote against the idea that AI is about to hollow out application software. It puts a floor under the group. It does not put a new ceiling on it.
The other re-rating was memory. SanDisk closed up 13.67% at 1528.11 after an investor day. Micron rose 4.23%.
The targets are for fiscal 2028 through 2030. Revenue growth in the mid to high teens. Gross margin around 80%. Operating margin around 75%. Adjusted free cash flow margin around 50%.
Those are software margins from a NAND flash company.
Which is why the wording matters. Those are targets for a period beginning 2 years from now, not results. An 80% gross margin has no precedent in NAND, a business historically defined by violent price cycles.
What has to be true for it? 8 major customers have signed long-term agreements covering about half of fiscal 2027 supply, rising to roughly 2/3 of fiscal 2028 bit shipments. Supply stays tight, and those contracts hold.
They also announced high-bandwidth flash, a tier between HBM and SSD, with customer samples at the end of this year, and inference devices in early 2027. After the close, Applied Materials reported record revenue of $9.115 billion, up 25%. Adjusted earnings of $3.50, up 41%, also a record. GAAP operating margin 33.7% from 30.6%.
And they raised. Next quarter guided to $10.25 billion, plus or minus $500 million, with adjusted earnings of $4.02. The chief executive called it the highest sequential revenue growth in the company's history.
The stock fell about 5% after hours, having already closed the regular session down 2.48% at 534.54.
Before we say why, one correction, because a false number is circulating tonight. Several outlets are reporting that Applied's free cash flow tumbled 80%. That is wrong. The company's own release shows non-GAAP free cash flow of $2.33 billion against $2.05 billion a year ago, up 14%. Cash from operations was a record $3.04 billion.
The actual negative is specific, and it is on the call. The finance chief flagged roughly $600 million of fiscal 2026 revenue headwind from the latest China export controls. China was 27% of revenue, down from 35% a year ago.
So this one is not purely about valuation. There is a real hole in the numbers, and it has a name.
The more useful thing in that report is not the beat. It is where the money is going.
Semiconductor systems revenue was $7.04 billion, up 26.5%, at a 37.7% operating margin from 33%.
And the mix moved. Foundry and logic went from 69% of that segment to 67%. DRAM went from 22% to 26%. Flash memory went from 9% to 7%.
In revenue terms, DRAM equipment grew roughly 50% year over year. Flash was flat to slightly lower.
Which is our read, stated once. The memory capital spending cycle is real, but it is a DRAM and high bandwidth memory cycle. It is not a NAND cycle.
And that sits directly against the scene before this one. SanDisk is a NAND company. It rose 13.67% today on margin targets for a period beginning in fiscal 2028, and on a product that does not reach customer samples until the end of this year.
The largest equipment maker in the industry just reported where the money is actually being spent this quarter. The flash share of its mix went down.
Now the other side. A record close on 69% of normal volume is not a confirmation. It is a record that happened while most people were somewhere else.
And Applied Materials is the third name this week to report well and be sold. Coherent down 7.99% on 243% of its median volume. Lumentum down 5.58%. CoreWeave down 1.34% on 203%.
Nothing deteriorated at the optical names in a day. They reported strong results and strong guidance this week.
They trade at roughly 40 to 50 times forward earnings. At that level, the marginal buyer sets the price, not the earnings. When money was needed elsewhere, the most crowded and most expensive positions were sold first.
Applied is the one exception to that framing because its China headwind is real and specific. But 3 companies beat, and 3 were sold in the same session and the same complex. That is the observation. We are not claiming it continues. And money was needed elsewhere, for a reason that started in the Asian session.
Prime Minister Takaichi's government signaled support for a Bank of Japan rate hike as soon as September. The yen strengthened sharply, and a carry trade unwind followed.
The background. The Bank of Japan raised its policy rate to 1% in June, its highest in roughly 3 decades. The 10-year Japanese government bond yields about 2.87%, the highest since 1996. The 30-year is at a record 3.97.
Dollar-yen had been trading near 160 after a joint U.S.-Japan intervention in late July when it approached 164.
And gold and the miners were the day's worst performers. On a day, equities made a record. Gold down 1.47%. Gold miners down 2.96%.
The usual explanation for gold falling is real rates or the dollar. That does not work today. The dollar index closed at 99.88, up 0.14%. That is nothing.
And it was not only gold. Iron ore down 430%. Copper down 3.45%. Uranium down 1.29%.
Copper, iron ore, and uranium do not fall alongside gold because of real rates. They fall together when someone is raising cash. Our read is that this was funding driven, not a changed view on any one metal.
But the volume does not let us say that everywhere. Gold miners traded 196% of median. Gold itself, 121. Iron ore, 101.
Copper traded 56% of normal. Uranium, 54.
Forced selling usually leaves heavy volume behind it. In the gold complex, it did. In copper and uranium, it did not. And those look more like an absence of buyers than visible liquidation.
So, this is the beginning of a funding concern, not a rout, and it is scheduled rather than finished. The Bank of Japan meets September 17th and 18th.
Which brings us to what the record itself raises. Fundstrat's Mark Newton has argued that around 7,800, the S&P completes a 5-wave advance from the low, raising the odds of a 5 to 7% corrective phase.
He names 7,500 as the first warning level, and 7,300 as the level that matters. The index touched 7,800 today.
That is his view. And it is worth carrying because it is specific and it is checkable.
He names 3 conditions that normally precede a real correction: deteriorating breadth, euphoric sentiment, money rotating into defensive sectors.
Breadth is the one that can be measured directly. Across a universe of 2,189 companies, 70.3% closed above their 200-day moving average.
That is supportive, not a warning. 70% of the market is above its long-term trend.
So the first of his 3 conditions is not present today. That does not make the target wrong. It means the setup he describes has not assembled yet. One more after the close. JD.com's revenue fell 2.9% to 346.4 billion renminbi, but adjusted net income rose 20.8% and adjusted operating margin went from 0.3% to 1.6%. Retail gross margin hit a record 18.5%.
And food delivery loss is narrowed by more than half on lower subsidies per order.
The top line shrank, so that is not a demand story. It is a discipline story. The subsidy war has been the largest drag on margins in Chinese e-commerce, and the first sign it is cooling came from the company that was funding it. Alibaba reports August 28th.
Which leaves the calendar, and there are 4 dates worth writing down.
Tomorrow is monthly options expiry.
August 26th, NVIDIA reports after the close.
August 27th through 29th, Jackson Hole. Chair Warsh gives his first keynote as chair on the 28th. He removed forward guidance from the statement, so this is the first platform that size he has had before a September meeting.
And September 17th and 18th, the Bank of Japan. That is the one most likely to repeat what happened today.
8,000 is 2.5% away, and nothing in today's data says it cannot get there.
What today says is that it would be getting there on light volume, with the hard asset complex already flinching, and with 3 companies beaten down in a single session for the crime of reporting well.
That's a wrap. If this was useful, follow or subscribe for the next one, and tell us where we're wrong. Thanks for listening.